Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a good day in the markets today. And in today's action, well, the SPY hitting a brand new record all-time high. The QQQ's up 0.7%, just shy of their own all-time highs. And we did have some pretty good rotation in the markets overall. A lot of the tech names that were beaten down yesterday came roaring back today, but a lot of the sectors that benefited from the rotation we saw yesterday continued onto their march to the upside. However, some names were indeed left behind as per usual. Now, in today's news, we got two key pieces of news that do raise some questions here. Number one was obviously going to be the ADP private employment report, which actually saw a subtraction of jobs in the month of June. We went negative for the month. This is the second time that this has happened in the last 2 years. And of course, with the labor market being front and center, does it raise any concerns for the near-term future, especially to the fact that we have the non-farm payrolls one, the official one from the Bureau of Labor Statistics, coming in tomorrow morning. Of course, we know that the Federal Reserve is watching the jobs market like a hawk, and any erosion in the jobs market overall could indeed tweak the path of interest rates cuts that we might be on in the next few months. Piece of news number two, which is everybody's favorite topic, has to do with tariffs. That's right, we haven't talked about tariffs in a while because there hasn't really been any meaningful updates. Well, today we got one, a trade deal, this time between the United States and Vietnam, striking a trade deal that imposes 20% tariffs on top of the 10% baseline tariffs, so total effect of 30% on Vietnam overall, to which Vietnam seems to be agreeing. Is this a benefit for the United States? Is it a drawback for Vietnam? How could it play in terms of the overall tariff rates, in terms of the overall impact on consumers? We will go through the tariff headline of today, but also go through several articles in terms of what's been happening to prices on the shelves for the average consumer in the last few months. On the channel that we've been clearly saying that the impact of tariffs was probably going to be felt in the end of the summer months, in which we are kind of coming into right now, and especially into Q3. So we're going to do a quick little checkup on the tariffs, on pricing, on inventory, and see if everything is still very good, or are we starting to see some cracks overall? And pretty much after we go through those two news articles, guys, we're going to get into our normal technical analysis rundown of our major market indexes, check on the rotation. Thereafter, we'll go through the same technical analysis, on some of our big tech names here, the entire big tech list name, see where the opportunities for some trades are, and where we could possibly also add to our long-term portfolios. And that'll be it for today, guys. Not going to do any biggest gainers and losers of today. We're going to focus on the news and most of the rotation across big tech and the indexes. In yesterday's video, I spent about 15 minutes going over like 20, 30 different names. So if you want to see what other names I was looking for some swing trades into tomorrow, if tomorrow's a red day because of the non-farm payrolls, well, just take a look at yesterday's video, the last 15, 20 minutes of the video, and you should have a pretty good idea of all the names that I'm looking to play. So with that being said, guys, that's going to be it for today. Let's jump right into the action, shall we? So the SPY up 0.45, the Q's up 0.7. Taking a look at the rotation, well, big tech was a bit of a mixed bag. Microsoft, Amazon, Meta to the downside, Tesla coming back up 5, Apple continuing to push harder, and semiconductors and Google also doing very nice. However, software, for the most part, was left behind in today's trade. We had some pain points here across insurance, not only Berkshire, but all of the insurance plays were down. Not only there, but also healthcare insurance after CNC came out with their earnings yesterday, and they got pulled a UNH, essentially, right? Down 40%. This is a company that's worth $17 billion, but a company that also does $160 billion worth of revenue. Suffice to say, the damage in the health insurance providers is not over yet. Other than that, guys, banks were doing good today. Visa, MasterCard pulling back. And the bottom half of the market, where we saw a lot of rotation yesterday, was fairly mixed. We had a bit of a spike in yields today, which was kind of counterintuitive. You get a negative jobs report, you might be expecting yields to come lower because that would hint at maybe an acceleration of the rate cut path. That's not actually what happened today. So curious to see what's going to happen tomorrow if the non-farm payrolls comes in negative overall. But we did have some names that were popping up higher. But overall, the market, as you can clearly see, guys, very, very mixed. Kind of a stock picker's market over the day today. On the one-day relative, you can see that even better, to where most sectors were performing well. You had some big red across individual names in their sectors, but for the most part, the sectors are able to lift higher. Bit of a confusing day overall. Healthcare and utilities were major pain points of the day, and now that we are clearly at the all-time highs for the SPY after yesterday's big day of rotation, today we gave some of those gains back, but still, in the last 1 week, you can see that most of all our major sector. As a matter of fact, all of them are now higher. So the market's still looking very good, but we will be paying special attention tomorrow to the last big piece of the puzzle, which is going to be the non-farm payrolls. If it follows the trend from today and comes in weaker than the expectation, or dare I say negative, the markets at that point probably will respond. Why did they not respond negatively to this data today? Well, let me show you exactly what happened today. So here is your private employment as measured by ADP, which is a private company, of course. It's not the Bureau of Labor and Statistics. And you can see we've been adding jobs for the most part every single month, except for one little time here in March of 2023. And then now as well. So the trend is very clear. The labor market still remains healthy, but we did have a bit of a downswing today. Where did that come from? Well, it came mostly from small and some of the mid-sized corporations between 1 and 19 employees, 20 and 49, 250 and 499. But the mid-sized and large-sized companies did increase overall employment. But the small companies, guys, unfortunately, the weight was just too large and it brought the overall number negative. Now, you may be thinking, well, possibly the deportations have had something to do with that. Not quite. Natural resources and mining was up. Construction, where a lot of illegal immigrants were obviously working too. Construction was higher. Manufacturing sector there as well was higher. Trade, transportation, and utilities. Information, where were the jobs lost? Financial activities, professional business and professional and business services, and education and health services. Leisure and hospitality was actually your biggest gainer here. 32,000 jobs added and 5K otherwise. So it's very tough to determine a pattern from this one. It's only one jobs report, and we'll get more information to tomorrow. But some analysts say that you should take today's jobs report with a bit of a grain of salt. Be very skeptical of ADP reports showing the economy lost jobs for the first time in years, says this article, and said some analysts. It calculates wages, taxes, and deductions for 25 million American workers, giving ADP, the private company, inside information on what's happening in the labor market. However, through the first 5 months of 2025, the difference between the two reports talking about today's and tomorrow's non-farm payrolls has averaged a whopping 63,000 a month. So maybe not the best indicator of the labor market. For that, we'll have to wait for the official one coming out from BLS tomorrow. However, the trend sometimes goes in line. ADP acknowledges its survey is not intended to forecast the BLS non-farm payrolls report, and in 2022, it gave up trying to do so after years of misses. Given its checkered history, some forecasters say the ADP report is useless. However, they point out that the two jobs reports trend in the same direction over time. Let's move in a bit further here. The average increase in ADP private sector jobs in the first 6 months of this year has slowed to 78,000 from 119,000 in the same span of 2024. So we're slowing down, at least measured by ADP. However, when the non-farm payrolls is measured too, this also shows that the pace of job gains is decelerating to 124,000 a month in 2025 from 179,000 in the same span a year earlier. So we know that the jobs market is currently under a lot of pressure. Remains to be seen if that pressure leads to cracks and if we actually start unwinding and the unemployment rate starts increasing, at which point you will see the Federal Reserve pivot faster than not. So we will take a close eye on what happens tomorrow, guys. In terms of how I'm positioned, I'm now fully back in cash. I'm now profitably out of all the wheel trades for the week. And if we get a big raid day tomorrow, I have tons of buying power to go and buy the dip on my favorite companies, which brings us into piece of news number 2. And it's going to be about the tariffs, guys. So buckle up. We're not going to get political. We're just going to report some of the things that have been happening here over the past few months because we haven't talked about tariffs for a while on the channel. So Trump saying the U.S. struck a trade deal with Vietnam that imposes 20% tariffs on its imports. This is on top of the 10% baseline effective rate already. Additionally, Vietnam will open their market to the United States, meaning that we will be able to sell our product into Vietnam at zero tariffs, which begs the question, well, how much was Vietnam actually tariffing the United States, right? Let's have a look here. Well, cars had a tariff of between 45 to 64%. Ethanol had tariffs of 10%, LNG had tariffs of 5%. All of these were proposed to be negotiated down as part of the rates. Other agricultural products like chicken, almonds, and apples have seen proposed tariff reductions as well. And alcoholic beverages could be, tapered down as well. However, guys, I'll just remind you of some of the numbers between the US and Vietnam. They are very in favor of course, well, Vietnam in terms of having a surplus with us, or with you guys, right? So the U.S. imported 136 billion of goods from Vietnam, How much did they export? Only 13.1 billion. So President Trump potentially hoping that Vietnam will take more US products, but I'll remind you, Southeast Asian countries, guys, are not known to import a ton of US products. Why? Because US products traditionally are expensive because the cost of goods sold here is a lot higher. The average GDP per capita in Southeast Asia is quite low. Essentially, what I'm trying to say is people in those countries cannot afford many US products, even if they wanted to buy them, which is why they tend to buy their own products or Chinese products, which are much cheaper in line with their own salaries, right? So keep that in mind when looking at these trade deals as they will move forward in the future. US Federal Reserve Chairman Jerome Powell said on Tuesday that the officials expect the impacts of the tariffs will start to show up more during the summer months. Some analysts believe the lack of a widespread impact on US prices so far is a result of pre-tariff stockpiling by companies, as well as the time it takes for those tariffs to show up in the economy. I'm glad they said that, because what we're going to do right now is dive into, well, now that it's been a few months of these tariffs, right? What are the prices doing and how are inventory levels shaping up as well? So here we go. Inside America's department stores, tariff-triggered price hikes are actually picking up. Let's move into it, shall we? Data we've analyzed is nearly 15,000 SKUs. Footwear is now as much as 4% above January levels at some banners, while apparel is roughly half of that pace. So we are seeing some slight increases in the tariffs, but keep in mind, inventory levels have also still been quite manageable. According to the data, Macy's SKUs of footwear reported a 4.2% increase in price, followed by Nordstrom 3.1% and Dillard's 2% overall. Here are your monthly price changes in footwear, and we're talking about footwear because Vietnam is the second largest provider of footwear to the United States. Some forecast that by the end of 2025, they will be number one. You can see a clear trend here since the time that the tariffs started to now across all of these different retailers. This is footwear. Let's move in a bit lower. Here is apparel. You can see a clear uptick here from the month of February when this all started, now into the month of June. A clear uptick virtually all across the board. And there we go. Price changes for bags at US retailers. We're all talking about things that Vietnam manufactures a lot of for the United States. You can also see a very clear pickup here from actually negative, deflation in that case, to now, for the most part, picking up in terms of overall prices. This is for bags at US retailers overall. The Vietnam trade deal concerning to retail suppliers, Nike, Lululemon, Patagonia, Puma, and H&M are some of the retail industry companies with manufacturing operations in Vietnam, but there are many more, of course. Vietnam is the second largest supplier for footwear, apparel, and accessories sold into the US market. Right? In the 2024, the US imported 274 million pairs of footwear from Vietnam, accounting for over half of all athletic footwear imports by volume and value. That's why it matters. Companies are mitigating what they can do and are passing on the rest. Consumers, who are the final arbiter on tariffs, then come into play. Will they buy the item that has gone up in price, or will they switch to another item in the same category that has less or no tariffs? The consumer gets to decide if they want to leave the category altogether. This is true. Tariffs will largely lead to price increases to the consumer, but the consumer also has a choice. Will they agree to pay those tariffs, or will they just shift their attention to something else? That remains to be seen. Presenting more data here, deep inside the US economy, more sticker prices start going up due to tariffs, and inventory is heading down. We know that a lot of the tariff impacts have been mitigated because companies did a fantastic job of building up 3 to 6 months of inventory. But now that inventory, the inventory that was not subject to tariffs, is currently dwindling down. Let's see what we got here. So we got one person from ITS Logistics, which handles a bunch of stuff in terms of logistics for various items from apparel to consumer products, saying that in their warehouses, depending on the product, price increases range from 8 to 15%. Footwear Distributors and Retailers of America for Q2 shows 55% of respondents, which are businesses, expect their average retail price to rise between 6 to 10% in 2025 as a result of the tariffs. So the prior article was noting that we are currently seeing some price increases in the 2 to 4% range, but by the end of the year, when the inventory levels run out and we are forced to pay new prices for new merchandise, well, maybe that's going to be in the range of 6 to 10%. The overall inventory footprint is also smaller. You are looking at 3 months of inventory on hand now versus 6. So this is something that we will pay close attention to here, guys, coming in the next coming months. online shopping sees the biggest slowdown in over a decade as tariffs disrupt e-commerce. This was a survey published on July the 1st, just yesterday morning. Take a look at the results of the surveys, which was conducted across 1,000 US adults. Now, it's obviously not the largest sample size, but we can clearly see some of these shopping trends in terms of online products. They're all down. Office supplies, sporting goods. These are the percentages versus 2024, which is the light blue. The dark blue is obviously 2025. Anything from office supplies, sporting good, cosmetics, furniture, home furnishing, large electronics, mobile phones, jewelry, watches, pet supplies, and the list goes on. Find me one thing that is higher than last year. Nothing. The only thing that is on par is actually groceries. So keep all of that in mind. We have reductions in inventory levels. We already have price increases at retailers, although the price increases are not significant. They could get more significant by the end of 2025. And the official Vietnam tariff rate right now will be approximately 30% effective. I'll remind you, prior to this deal, it was going to be 46% altogether. So they are saving some effective costs, but of course not all. And that is everything we had to do for a quick little update on the tariffs. Hopefully you guys enjoyed that. We are just going to have to take this, guys, one report, one data set at a time. The trading plan and the long-term investing plan is always so simple. If you're trading, trade level to level. Don't get too greedy. Take your profits, set trailing stops, trade with stop losses. You guys know the rules, right? Don't get too greedy is the name of the game in this market, because we know that potentially Q3 data is not going to be as rosy as perhaps some people might think. But obviously right now, the bulls are in full control, so we can continue to take some swing trade longs, provided that we're trading level to level. For a long-term portfolio, it's always been so simple, guys. Every single paycheck, every 2 weeks or every month, depending when you get paid, 10% should be going into your favorite ETFs or your favorite long-term companies to build a future for yourself for the next 5, 10, 15, 20 years. Anything that happens this year with the tariffs or the economy or anything like that, guys, is going to be very small scale in terms of where your portfolio should be by the end of the next 15 to 20 years. So make sure you're always making investments in your own future. With that being said, guys, that's all the news we had for today. Let's jump into the chart, shall we? So taking a look at the SPY hitting a brand new all-time high, and in the event that tomorrow's report comes in negative and we have a bit of a big red day, well, we know that the bulls are in full control. Any pullback, anything above 592, looking for a higher low for possible further trend continuation. We have very nice support below us, 610 down to 597, which is essentially just your prior resistance range highs, prior all-time highs, and the weekly bulls are also full in control right now, looking very strong on the daily and weekly timeframes. Full bull control, so I will be looking to play the pullbacks, and I'll be using, once again, either call debit spreads on my favorite names. If they pull back into support, we have very clearly defined stop loss areas right there. A pullback would result in some criteria for some longs and even selling some puts under the market, as I don't believe the bears will be able to get through this very challenging area in one clean shot. You can take the analysis that I'm doing on the SPY and apply it to your individual stocks, especially the ones that are looking the same as the SPY and the QQQs, as a lot of these, as we'll move into in the tail end of the video when we look at the big tech names, a lot of them are showing the exact same patterns. I'll give you guys the levels just so you guys are ready, but overall things are still looking pretty good. Moving on to the QQQs right now, QQQs also not looking too bad, and I'll remind you, right, we do have positive July seasonality. But when could the jobs data really start eroding and the price increases from tariffs really start to be felt? It is in the fall period, right? Q3, so end of summer months. Think August, September, October. So for July, the trading plan, for me at least, is going to be trying to make the most of this bull market run right now, and then take the foot off the gas leading into the fall months. Take the profits that I need to take, come into those months with as much disposable trading cash as humanly possible to avoid any larger scale pullbacks that could come from a otherwise recessionary scenario with weaker jobs data and possible price increases and weakened consumer spending. But I'm not trying to predict too much. That's just going to be my trading plan for the next couple of months. That being said, the QQQs are still looking quite good right now. Right, all things considered, we're trying to go for the new all-time high, but not setting new highs just yet. In the event we come back tomorrow with the maybe non-farm payrolls not being too good, I don't know. Maybe we just rally to the highs, and that's fine. But if we do pull back, I'd rather give you guys the pullback scenario, because that's going to leave you guys with the most amount of questions, yeah? Anything above 524, still looking for a higher low for possible further trend continuation. And we have a lot of support below. 537 down to 524 is your prior all-time high resistance range. So it's going to be tough for the bears to get through this in one smooth shot, which is why if we pull down into here, there's a good opportunity for some swing trade longs with a stop loss below your higher low. Why? Well, because if you invalidate that, guys, you're going to invalidate the weekly trend as well, and you may just be looking a little bit lower. So you don't want to be stuck in those trades as we lose this level, but we're not going to talk about losing the level just yet. The bulls have full control of this chart. The higher lows are set at the exact same location of 523. So keep special attention to this level. It is now a daily and weekly level and a huge area of support. Moving on to financials right now. Financials actually flat on the day, trying to set a new high, but not quite getting there, yeah? Financials, same concept. Beautiful daily uptrend, and we got a lot of space. Anything above 49.82, let's call it. Just going to be looking for a daily higher low for possible further trend continuation. Not looking too bad overall, right? If we do backtest this area, which is 51.50 down to 50.8, could be a beautiful little breakout, retest, and run opportunity, similar to the one I was showing on the SPY and the QQQs, and the weekly bulls still remain in full control of this chart. Beautiful breakout of the bull flag right now, and we're working with a lot of space for any pullbacks. So keep that in mind, guys. There's several names that are still quite attractive, in my opinion, on any pullbacks. Visa, just to name one, that would be a heck of an attractive pullback if the markets do pull back. MasterCard, I mean, we already took the trade down here, but if they give me a re-entry around the 200 EMA, around this 535 area, that would be a very attractive trade too. Moving on to XLV Healthcare. Healthcare coming down after yesterday's big push, and that, of course, was due largely to a lot of the big health insurance companies coming down, right? Other companies tried their best to hold up the index, but it was simply not enough. That being said, looking a bit lower, this chart is the clearest, in my opinion, on the weekly time frame. There's still a battle going on at these lower levels, guys. Yes, it was a weekly downtrend. We got a nice bounce, 75% retracement bounce. They're looking for the trend change. But if we get stuck down here, don't be surprised, right? We are trying to set some monthly higher lows right now. The bulls are reacting nicely from this entire support zone, but it's very, very choppy overall. It seems as though as soon as healthcare starts getting some lift, as soon as we start getting some curling of the momentum, something happens, a day like today happens, an entire sector of healthcare just gets beaten down. Sometimes that's pharmaceuticals. A lot of the times recently, it's been health insurance. So overall, it's been a very choppy trade. I still like this trade, but it may take a little bit of time for it to really start ramping and getting some legs. Moving into semiconductors right now, semiconductors, 1.96% to the upside. And there were several attractive plays. What I was showing yesterday in yesterday's video, guys, right? Several of our favorite semi names pulled back hard yesterday, opened up some decent short put opportunities to be selling some options into respective support areas. So potentially some of you guys got some of those trades there. I took one yesterday on AMD and I was able to close it out today. So semis is still the more favored sector right now. Overall, looking very good. The bulls are looking for some expansion. Possibly the daily higher lows being set already, 272.41. Looking good, right? Beautiful daily uptrend. But if we reverse and engulf equal high and lower low, that's a daily downtrend, and that will be synonymous with possible weekly consolidation. But the bulls have tons of space here, guys, right? 260 to 250 is the possible fallback range. And look at this, guys. Beautiful weekly trend expansion. No red flags here, in my opinion. They're still looking for breaks of the all-time highs. And my favorite catch-up play for all of semiconductors, you must know by now, is indeed ASML. Very good valuation. Has not ran as much as the rest of the pack, but any other names are still looking good. The names like NVIDIA, AMD, Broadcom, Micron. If you guys have shares in those that you accumulated during the tariff lows, I don't necessarily see any reason to sell, because end of 2025, early 2026 as well should be very good, a very good growth cycle for them, right? IWM Russell. So the Russell right now, 1.4%, looking very good. Finally breaking out of the resistance range. Resistance range was 217 down to 209. I cannot change this green until they close the weekly candle, because if tomorrow we give everything back, it'll just be a look above and break down below. That being said, it is looking very attractive right now. Weekly is a beautiful weekly uptrend. If they close above here, then all of this range becomes support, and we might be looking for a breakout, retest, and possibly run trade to the upside. Not looking too bad. Growth is still somewhat on the fence. Of course, it's going to benefit from some rate cuts overall. But if you go into a, tariff prone, or rather a tariff based correction or contraction in the economy, well, of course, growth is not going to be the place to be, at least not the Russell. Moving on to our yields right now. Well, the VIX was actually down today. Nothing to speak about right there. If tomorrow's non-farm payrolls comes at bad, you can expect a spike in the VIX, which will be very good for selling options. If tomorrow's payrolls is good and we get a bit lower here, guys, right now is still a good zone to be building some long options. If you guys are looking to take swing trades or something like that using long options or leaps, the VIX at a lower end is usually when you want to do that. The dollar right now got a little bit of a bid, but we know the dollar has been very, very weak overall. We're still looking for when this is possibly going to reverse. The next area, I mean, we're in it right now, but pay special attention, guys. This is the 200 monthly EMA. How often does that get tested? Well, not very often, especially in the context of the last 10 years. That is the next line of defense, in my opinion. It's good for companies that do earnings internationally because now they'll be facing currency tailwinds rather than the headwinds that they've been facing, right? Companies like Visa, MasterCard, Microsoft, Apple, they've all had reduced earnings because of currency impacts. Now you might actually see some currency headwinds, which could be good for them, right? Speaking about yields, well, the jobs decline today definitely didn't do the trade that you would have thought, right? You would have thought that if jobs showed weakening, it leads to an acceleration of the rate cut path, which would maybe drop long-term yields. That didn't happen, not on the 1, 2, 10, or 20-year yields overall. These will still be very choppy. Tomorrow's report will probably move them a lot more, but you do want to see a breakdown here on the 10, and you want to see a breakdown here on the 20 as well, especially the 20. You want to see it come crack below 4.65 to really be sure that, okay, now we are actually moving down. Now we are kind of getting more and more confident in the Fed's ability to cut, especially in the month of September, and rather than them holding out until the end of the year, essentially, right? So that being said, bonds are still a good trade, but a very slow trade to say the least. It's going to take some time, guys, to get the lift on those bonds. So hopefully if you guys are playing calls or any contracts, hopefully you guys have a lot of time on those. I mean, shares are fine, but still. Moving on to gold. Gold overall, not really moving today. Excuse me, they were up about 0.55%, but in relation to yesterday's 1% and the prior day's 1% move, they're kind of just slowing down right now. Let me just blow this chart up because we're getting really, really tight. I just want you guys to see the levels overall, right? We're coming right now into resistance, which currently stands at about 3382 down to about 3350. We'll see if the bulls are able to get it done right now. This was the daily downtrend. They now have a nice engulfing move, and it's going to be up to them to reset the daily uptrend. So possibly a new trade now that the bulls have proven to us, okay, they want to protect the level down here, maybe a two-step recovery process. Yeah, if we get another little dip buy down there, I will personally take this trade myself too with a stop down below there. We'd be targeting entries within the support range and then targeting weekly expansion levels because this is a weekly time frame trade, right? Consolidation, you got the breakout. This is the weak leg number 1, higher low, and then possibly going for the higher high breakout trade. So I'll be looking for that back test on gold. That's the only trade opportunity that I see right now. Moving on to Bitcoin. Got to talk about Bitcoin, guys. Bitcoin actually finally coming over and above the top here, cracking into the 109, almost 110 region. And we know that we were looking for a bit of a back test from support, right? 105.5 down to 101. Did it pretty much perfectly for the new uptrend. This is a very nice engulfing move by the bulls. Now you can see what we're looking for. This is what I'm looking for on gold, essentially, right? The recapture of the level, the back test of the level, and now attack the next level higher. So looking not too bad. Last week's candle close is looking very good for some bullish momentum continuation. The seasonality for equities is good in July, but the seasonality for crypto is also good in July. So we will see if they can actually fulfill the prophecy, break the all-time highs, and go towards the round number psychological targets, 115, 120. As of right now, it is looking good for some expansion. But let's not get it twisted. If jobs are bad tomorrow, it's going to bring down the entire market, right? So that is going to be the one thing standing in Bitcoin's way, in my opinion. If the jobs are good, you might just get that follow through. That's pretty much it for your overall market rundown. Now let's dive into the big tech names. All right, so looking into Apple, another 2% day to the upside. This upswing on Apple was absolutely gorgeous. Daily uptrend is now to the bulls and now attacking the resistance range. 210 up to 221 is that range. Kind of coming into the 200-day EMA as well. We know that Apple has been trapped for the longest time between that resistance and this support, 196 to 185. We had been very vocal on the channel that it was a very nice proposition to be building some swing trades on Apple. Apple was not going to be left behind this rally forever. Weekly MACD is curling, and now you're finally getting that expansion target. If I was looking to re-enter this trade, well, of course, we'd have to be looking for a possible higher low, maybe a back test of like 207, 205, which is these guys right there, and maybe we can take this swing trade again. And if they just push, well, unfortunately, it's ran away from us. The time to position was down here or here, which is where I position myself. Now this is indeed the take profit range, but not looking too bad for the expansion on Apple. Love to see it overall, all things considered. And now Apple, if they close the week like this, weekly uptrend set for Apple, trying to break out of the consolidation range. Moving on to AMD right now. AMD up 1.77%, but still not that much above yesterday's high. That being said, we are still in somewhat of a consolidation mode for AMD, getting rejected right now at resistance 145 up to 155, and now just hunting for the daily higher low. The bulls are playing defense at the 12, but if we do break down, keep in mind we're probably going to 132 down to 120. Most of all the daily EMAs are in there, and a lot of the weekly EMAs are at the mid to low 120s as well. The weekly bulls are in full control of this time frame, which means that any pullback should also be viewed as a nice buying opportunity, as your medium and long-term bulls are indeed in control. And if we get some pullbacks into here, into tomorrow's session, you will definitely see me write some short puts on this stock into the mid to low 120s for July 11th, which would be next Friday. The valuation on AMD at around the 140 mark is still very manageable in terms of their growth expectations for the next few years. Moving on to Amazon right now. Amazon actually down 0.24%, but we know what Amazon's been struggling with for the past 4 days. The resistance highs, 228 down to 217, is that range right there. Daily downtrend, boom, the engulfing move. And now the bulls are just looking to gain a bit more momentum, consolidation, looking for a higher low to maybe do the two-step process, as of course they were not able to smash it in one clean shot. We'll see if they have the strength, if they pull back a lot more, a lot of space, guys, anything above 207 for that higher low, and possibly go for it again. Amazon is still looking good, whether you look at it on the daily or weekly timeframes. The bulls are indeed still in control right now. It's been struggling within the confines of this resistance range. In terms of long-term portfolio, this is still one of my favorite stocks to add, even at 220. I think Amazon is relatively undervalued to what it's going to be doing in 2026, 2027. By the end of the year metrics, maybe not so much, but when you factor in the growth for 26 and 2027, it is looking very good overall for Amazon. Still one of my favorite plays in the market. On to Google right now. Google actually up 1.61%, not looking too bad. Daily downtrend, engulfing move by the bulls, trying to set up the higher lows yesterday and go for the the daily uptrend conversion, but also the second attempt at making it closer to the resistance highs. 184 up to 190 is that resistance range overall. It was somewhat problematic for the bulls in the past. You can see several rejections here, smash through it, use it as support for a couple of months, and then unfortunately the tariffs actually cracked it. So that's going to be the next area that we'll be looking out for. In the event that Google just rolls over, I will be playing Google stock again, as I have this week too, in the lower 170s, down to 160 as low as I can get with those short puts. And obviously too, that would be a nice location for any other swing trade long. So the weekly bulls are in full control of this chart. Google is not looking too bad, but we know in August they have their Department of Justice ruling as what's going to be the impact, or what's going to be the formal resolution now that they've been found guilty of being a monopoly in terms of search and advertising. What is the judge going to do, right? So we know that that's the looming black cloud over Google for the month of August. All that being said, I still think there's a very good risk reward on this stock, even with that looming threat. Moving on to Meta right now, down 0.79%. Consolidation on Meta simply continues. They smashed the new all-time high and went into daily consolidation right away. That's not too bad of a thing. We're coming into the next support range, which is these guys right there. 705 down to 683, anything above 676. Looking for the higher low for possible further trend continuation. So Meta has a lot of space. The one thing you do not want to see Meta do is come all the way down here. That will be a pure loss of momentum. It opens up the door for the daily downtrend and just opens up the door for a bit more weekly consolidation. It would not be the worst thing in the world for Meta. It has run a lot. Early July, as I was saying on many tech stocks, might just be a little bit of early consolidation, but we could have a positive lean for the rest of the month. So far, the technicals are not looking bad. We haven't broken any major levels. The bulls are still in control of all the time frames. It's just that for buying Meta stock up here, you have to have a very long-term time horizon, because it is at the top end of what's considered to be fair value, in my humble opinion. I have no doubt that the shares of Meta that I own will eventually one day make their way into $800, $900, $1,000. But it's all about what is the price you're getting for paying. What is the price you're paying for the future growth of the company, right? And it's definitely not as attractive as it was at 600 or below when we were buying it earlier on this year. Moving on to Microsoft right now. Microsoft also pulling back again, 0.2%. But all things considered, guys, Microsoft has not lost any major levels. We are still defending the 12 EMA, which the bulls have been riding ever since the earnings release. The higher low right there is 473. If you come down too low, there'll be a loss of momentum of the last daily move. It might show the bulls are a bit tired. Daily overbought conditions are now being rolled over, and it opens up the door for a possible daily downtrend, which essentially would just be weekly consolidation. Very healthy weekly consolidation after a million weeks of upside in a row. Eventually, it does have to consolidate, right? And the next line of defense down here will be 460 down to 445. That's the most obvious area of support that the bulls can fall back into if the correction gets a little bit larger than just, these couple percentage points drops and rally. If we just rally from here, obviously we're going exactly to 500 psychological. Moving on to Netflix right now, also consolidating 0.68% on the day. Right? Not too bad. So looking pretty good overall. Daily uptrend is maintained, and anything above 1200, let's call it, is looking for a higher low for possible further trend continuation. But if we give back too much of the move like Microsoft or Meta, you open up the door for the daily downtrend rollover. They'll have to get through this whole 1215 down to 1177 range of support first. It's there, but you can't even see it on the weekly, right? It's just one little area of consolidation. So consolidation could move into there. That's the 12 EMA. That would be the first logical area. We'll see what the bulls do if they actually come down into there, how they react. One thing's for sure, Netflix could use some monthly consolidation, as it has been monthly overbought now for the past 4 or 5 months in a row. Netflix valuation as well, guys, is very high in the high 1200s. It was high at 1200. It's even higher at 1300. I'm not adding any Netflix shares here, but I'm not selling any. The portfolio that I have, the Netflix shares that I have, those will be maintained for the next 5-10 years. I still think Netflix is the most dominant streaming company on the planet. Moving on to NVIDIA right now. NVIDIA recapturing some, but not all, of yesterday's losses, establishing the new higher lows, 151.61. It was a very clear daily uptrend. We were saying any pullbacks, looking for a higher low. They've now set that, trying to go a little bit higher. However, if we roll over, right, that'll be a daily downtrend. You got big support down here, 150 to 145. So even if we roll over, guys, is it that big of a deal? No. Who's in control of these charts right here? It is your weekly bulls, just looking for a higher low. So we will see. I'm preparing you guys for the rollover scenario, right? Because the follow-through scenario is just too easy, essentially, right? I'm not in any new swing trades on NVIDIA. I like to start my swing trades after weekly consolidation into support. We barely grazed it right there with the bottom of yesterday. So I'm not in NVIDIA swing trades, but in the event we fall over the next few days or something like that, I would be looking for some short put opportunities under 140. Moving on to Tesla right now, up about 5% today. Very nice reaction from the support range yesterday, 300 down to 260. A few of our Discord members smashed some short puts yesterday at 260, and today they were all out of those pretty much for like 60, 70, 80% profit. So congratulations to all you guys. I know you guys have been smashing those trades, but no clear trend direction, right? If you want it, it's just range-bound trading, guys. It's kind of like Apple, right? Resistance range here. We've been struggling now for roughly 2 months, trapped between support and resistance, which is pretty much 340 up to about 360. There is a swing trade from lows to highs. The stop loss will be below the low of yesterday. And of course, you're targeting the range highs. It's not quite a 2-to-1 trade. It's not the style of trade that I like to take, right? Because Tesla is somewhat very wide. It's not like Apple, right? It's kind of a wide trade, but it is close to a 2-to-1 proposition. So, it's not the worst trade out there, but it is a trade. If you guys were looking for me to price out a trade for you, Tesla, I'm not really doing much on them. They had their deliveries come out today, which show that unfortunately they did miss the delivery estimate, sadly, but still, guys, right? Still, we'll see what they have to do. They have to scale their robo-taxi business overall. I'm not starting any new swing trade longs. They have their earnings coming up, guys, in not that much time at all. Coming up the end of the month of July. Moving on to Palantir right now. Palantir up 1.1%, but still towards the low end of the trading range of the week. Not a fantastic move today by Palantir. Daily uptrend, unfortunately, was now lost. They flushed the lows, which is 136. You open up the door now for kind of the lower high into lower low. However, the US is trying to pass the, of course, big, beautiful bill. There's a lot of money for defense corporations in there. I would not be surprised if Palantir is going to get a decent chunk of that. But still, right, that's a positive benefit for Palantir, but it might not hit the books right away. So that being said, if we do head into more consolidation, understand that we have a nice support zone down here, 125 to 120. And that would just be looking for a weekly higher low, because the weekly bulls are in full control of this chart very obviously, right? The higher lows are set there at about 119. Valuation is still very expensive. Palantir remains a hold for me. I've already sold the shares that I wanted to sell for this one. I'm keeping the rest. It's not a buy. It's not a sell for me, at least anymore, but could be considered a profit take for area for many individuals if you consider yourself overweight. That being said, Not looking too bad. Moving on to SOFI right now. SOFI up 2.72%. Not the worst day for SOFI, but of course not breaking the high of yesterday or the high of Monday's trading session. But all things considered, not that bad, right? The bulls are still in full control of this chart very obviously. We're looking for a higher low at this point, anything above 1473. Still looking for a daily higher low. The reason I'm saying I'm not convinced of the expansion, they're trying to go for the short-term time frame recapture. But keep in mind, guys, tomorrow we got non-farm payrolls, right? If it comes in negative, what do you think is going to happen? Of course, SOFI is going to be down, and we're going to look for further consolidation. So I'd rather talk to you guys about consolidation, and the next area is going to be 16 to 14. That's the area to pay attention to. It's the biggest area of support that we have close from back earlier this year, but also all the way back around the IPO days in 2021. So keep that in mind. The weekly bulls are still in full control of SOFI, and I would not mind playing this one on a pullback for some short puts into this area, but also for some new swing trade longs if that does happen. Pay attention for it. Just keep it on the back burner. The SOFI shares that I acquired back here, I am not selling. I'm not taking any profit. I'll be looking to ride them into the expansion of the company over the next few years. On to Uber right now. Uber has been barcoding for essentially the past, 6-7 trading days, but it's not looking too bad, right? So it's going to break one way or the other. It's a very tight range right now. Some could argue that this is some form of a bull flag. Whenever you have a very nice and violent move to the upside and you consolidate in the top 25-30% of that move, that is usually a bullish leaning bias for a further breakout. We'll see if they can actually get it. If they do get it, the breakout area is obviously going to be 100 psychological. And if we break down, however, the bulls are just going to be looking for a higher low, right? Anything above 82, just looking for some consolidation for a possible recapture and move long thereafter. Uber is not looking too poor, all things considered, but no swing trades at these levels from me. The swing trade area was down here as it was a picture perfect breakout, retest of the support range and run. This is the actual take profit territory, TP number 1. TP number 2 would be at $100 if you're holding some swing trade longs from there. And in the low $90 range, guys, Uber is no longer, I mean, it's not expensive, but it's also not cheap anymore, right? So for me, this one as well is kind of just, it's like a nibble or just a hold at this current stage. And lastly, TSM up 4%. Brand new all-time high on TSM, looking very good, all things considered. One day of pullback was all that TSM wanted before putting in more gains. Daily higher lows are now set at 221. Any pullback looking for another higher low for further trend continuation. No swing trades for me, guys. Not my style to buy things at the all-time highs on the breakout. I bought more TSM for my long-term portfolio all throughout the correction. And now I'm currently just sitting on a much larger position. So looking good there. No swing trade longs from me. But if this is your first time ever seeing TSM, which would be surprising, but if ever you wanted to start a position on TSM, it's not the worst. Even though TSM is not, sold off, right? It's not the worst. If you factor in their forward price to earnings and their forward growth, it's not overvalued right now, okay? I want to make that clear. It's not overvalued. So this one is still technically a nibble, right? But I know everybody likes buying things on dips. If we got a big dip in the market, of course, you guys know where we're going. We're going back to roughly 210, 200. That would be like a 7, 8, 9% correction in the markets. Remains to be seen if we're actually going to get that. TSM bulls are looking very strong right now. Beautiful follow through. I'm still holding all my long-term shares. And with that concludes today's video. Hopefully you guys enjoyed. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these every Monday to Friday after the close. And lastly, if you have any questions, please feel free to reach out in the comment section. I always love helping you guys out the best that I can with anything that might be on your mind, either stock market related, macro economic related, or anything else, trading strategy related, or stuff like that. Always feel free to reach out down below. And last but not least, guys, if you are interested in joining a trading and investing community, ours to be specific, well, with over 180 other members, well, now might just be the time if you were thinking of joining, but maybe on the fence. I am running a promotional code for the 4th of July. Don't run them too often, but now I definitely am. The promo code is capital letters July 4. I'll leave it down below in the video description. Of course, within the confines of the trading and investing group, you get access to all of my swing trades in real time, whether those are the wheel strategy trades. Here's just this week's trades that I haven't yet posted because the week's not done yet. Here are just our closed trades. So we do call debit spreads, wheel strategy trades, elite call options, swing trades with shares, and everything under the sun pretty much. Here's just a lot of our trades from the past 2 months. The green check marks are wins and the red little circles are losses. Of course, you get access to all of those. You get access to our private morning live streams Monday through Friday, where I stream for about 2.5 hours, trade live, and take all your questions on your stocks, your options, and your long-term portfolios. If you can't be there, they're always recorded. You can ask me all your questions in our chat rooms all throughout the day, and I'm very happy to answer and very quick to answer as well. You get access to our private educational video section where I go over the basics of technical analysis, fundamental analysis, trading strategies, whether for leaps, credit spreads, debit spreads, all different things that I don't show too much of on the channel, and many other things like how to grow small, medium, long-term, long portfolios, building long-term portfolios as well that you're going to buy and hold forever type of thing. A whole educational section in there, and you also get access to all my charts. Whenever you see these charts with support resistance levels, you see the fundamental analysis breakdown, you can just copy paste all my charts on TradingView and they become yours. And you can also copy paste all of the watch lists that I use for trading every day too. Just an added bonus for all our members. Once again, if you wanted to participate or maybe just try it out, the promotion code at the checkout page is capital letters July 4. Okay, I'll leave it down below in the video description. Hopefully I see some of you guys in there soon. And if not, I guess I'll see you right back here on the channel. That's all I had for you guys today. Pay attention to those non-farm payrolls. And I hope you've built a watch list. And tomorrow, if you're trading the wheel, filter by red, because you might just get some nice opportunities to write for July 11th, the following Friday, because we get 3 free days of time decay. 3.5, Thursday afternoon, Friday, Saturday, and Sunday. So you'll be able to pocket some of that free time decay, but don't go too crazy, right? You still want to save some buying power in case some stuff happens over the weekend and we get more red on Monday. So that being said, that's it for me, guys. Take care. Have a beautiful day, and I'll see you guys tomorrow after the close. Peace.